This is an update for Thursday, March 1st, 2018, and I'm going to review the last trade that I executed with the trade copier and sent out through the trade alerts. Unfortunately, I was not able to send out the other trade alerts in the chat room. So in the coaching chat room, we were talking about watching the dollar. So I'll explain the setup, but I wasn't able to send out the other two trade alerts in time because they sort of took off a little bit quicker than I anticipated. That was one of the reasons why I put in the price level at 107 point. I think it was 01 on the dollar yen. But anyway, I'll explain the setup here. So we're looking at the dollar index, and in the chat room this morning, I was talking about how, and I posted the update there in the chat room. I was talking about how as it was approaching this resistance level up here, I'll go ahead and detach this so you can see what I'm talking about. It looked like it was finding an area of resistance in here, and I had mentioned that it looks like when it starts to approach the 90.80 area, I talked about this before it actually did it, that I would start looking for the possibility of some kind of a selling, the potential to sell it and to look for a possible reversal on the euro dollar and possibly the pound dollar. Pound dollar is sort of going sideways right now, but anyway, that's what I was looking for, and I said that it could possibly retest and go up a little bit higher and maybe get closer to the 91.00 psychological level before it turns around and drops. But I was looking for signs of weakness here and then waiting for economic data and all of that to get out of the way during the New York session because that's when I would most likely see that reversal. So it was just a matter of timing. I didn't get in on the first bearish candle, as you can see here. This is the 1 hour time frame for the dollar index. And then you can see that it spiked up one more time there and it went as high as 90.94. So it approached the 91, and then at that point I knew we were a little bit closer and that was a lot better, and then things started to really shift. Now, I'm focusing right here on the CCI because I mentioned this pattern and I've traded it, and we've been talking about it a lot in the chat room since I sort of not released it. I mean, I teach it in my membership site in the traders course, the real deal traders course. I teach how to trade this pattern and this technique. But since I think think it was the beginning of last week or maybe the week before, I started talking about the ghost pattern a lot more. And then I get a lot more questions about it because it's just an interesting pattern and it seems to develop quite a bit and very often with economic data or during the New York session. Not necessarily with economic data, but very often it will set up with it. That's better when we can confirm it that way. But what I'm getting at is that to trade a pattern like this, very often I would much rather. So what I'm looking for, sorry about that interruption. So what I'm looking for is an opportunity to take a trade like this where the move, whether it's especially if it's going to be a reversal, if it's off of resistance, if it's going to drop back down, in order for me to consider a significant move that I could expect to trade and to earn 20, 30, or 50 pips on the trade, I need to do it at a time when there's more participation and more volume. In other words, like the New York session during the morning, maybe right after economic data or around economic data, when there's just more people participating and more people trading it. And that's what happened this morning. That's why it worked out so well. So this is a head and shoulders pattern here in the CCI. And that is really what, I mean, in addition to the technicals and looking at everything that's going on up here in price, that is a big part of the confirmation on a trade like this. It's called the CCI ghost pattern. So what is happening here is I'm waiting for price. You can see the left shoulder, the center, the right shoulder here, and I'm waiting for price to clear that neckline. And I'll take this out a candle here. Well, that kind of gave the whole thing away here, but you can see when it breaks here, and my entry was actually a lot sooner, but I needed to make sure that if I was going to send out the trade alert, that there was going to be enough time for people to, that are receiving the trade alert to actually execute the trade. But nevertheless, I took this trade with the trade copier as well, and it produced the same results. But there's only one target with the trade copier. That's the other thing. There's only one target. I can't scale out with the trade copier. It doesn't allow me to scale out. If I was to close half of my trade and my position and then trade it to another, the remaining half of that trade to another target, it would close the trade out entirely on everybody who's receiving the trade on the trade copier. So it doesn't allow me to scale out with the trade copier. I can just take one target. But the trade alert today, and I'll show you the targets here, was there was actually two targets on the dollar yen. So what I did was I used the dollar index here to confirm and help me set up this reversal and find the reversal in the market, in FX. And I talk about this quite a bit, is that this doesn't happen every time that we see a reversal, but very often when it's about the dollar, for the most part, at that particular time during that session, in other words, when traders and everybody's looking at the dollar. Now, I was also doing the same thing with Japanese yen futures to make sure that I had solid confirmation at the same time. So what we're doing here is looking for an area where the market is about to turn. The market, the FX market is about to turn. So this was a high and the dollar was going to drop. And at that point, let me go ahead and so you can see how far it ended up dropping. It was a pretty significant move. And that spun the dollar, euro dollar up, and then the dollar yen down. So here's my setup here and this trade here. So the entry was at 107.01 approximately. I actually could have gotten in a lot earlier, a little bit earlier. I mean, I was talking about it in the chat room, so some of those individuals in the chat room did get in a little bit earlier as I was confirming this trade with the dollar. But the stop was up here at 22, so it was a really good, affordable stop. And here was the first target, 106.80, and then the final target here at 106.50. So those who traded it with me off of that trade alert ended up picking up about 50 pips. Now, one of the things that I'm doing here as far as the price targets, again, if I don't have a a price swing, a solid price swing like an A, B, C with a retracement, where I can use that Fibonacci tool to find Fibonacci extension targets and use those, or the extensions, to use those as price targets, then I'm going to use these psychological levels here. And that's why I trade to the 80 and then to the 50. I think it went down as low as 16, so it actually hit another 20, but that was what I called, was 80 and then 20 was the, 50 was the final take profit level. So it was a good trade. I mean, again, not knowing, if you tried this at another time when the market's going to be slower or there isn't any economic data and the dollar's not going to react the way it did, then what's possible is that it would just drop down a little ways, from the entry or from the high, and then bounce around, maybe hit 75, go back up again, run back up to like 5, or, something like that. It just could have stayed inside a consolidation. So this was also about the timing. So, and the reason that I'm being so, I keep harping on this and I keep talking about it is that I want you to understand my thinking behind this. So I'm going back to the dollar index, and it was the dollar that I was watching because that was, for the most part at that time, the dollar that everybody else was pretty much watching. This is where that term was really going to start. But I was picking picking this time, this point in time with the New York session to use the this ghost pattern here. That's otherwise I would not have used this ghost pattern earlier in the session. I would have felt if it was like at, let's say, 4, or maybe 5:15 or 5:30 or something like that, New York time, and then I knew that there was going to be a wave of economic data and some analysis and discussion and the whole what we go through in the mornings with the New York session. Very often when it's busy, there can be some pretty solid reversals, or we see a move up sharp and then a sharp move down and then it goes back up again. That all happens with very often with a lot of that, the release of that data and that speculation and all of that. And that really kicks up when there's more traders involved trading. And that's what I was doing. I felt much more comfortable trading this ghost pattern during the New York session, not later in the session, not now, because we're looking at like 3:30 p.m. New York time. I wouldn't be too comfortable trading it right now at this time. I would think that there would be less momentum, less participation, less volume. I can see it. Looking at Japanese yen futures to confirm this trade here on the dollar yen, that also helped. So again, there was more volume coming into Japanese yen futures at the same time that I was doing all of this, that I was lining all of this up. So I'm very particular. Again, I can't stress this enough. I'm extremely particular about when I use this ghost pattern. This ghost pattern can fail if you don't use it at the right time and you're not careful and you don't look for confirmation. So just to give you a little bit of a backstory on this and how I started using this pattern, I didn't develop the CCI ghost pattern. I started using it as a result of joining a group called the Woody CCI Club. They're still around, and I used to trade with them in this chat room. And basically, this is my story. Many of you have probably heard it and are probably sick of it, but for those of you who haven't heard it, this is what they were doing. They would basically, a lot of the traders, not all of them, but a lot of them did, they just looked at the CCI indicator. And that's how they traded. They traded off of where it was pointing and what direction and what it was actually doing and the patterns. They didn't care where price was. They would literally execute a trade. If they saw the CCI ghost pattern, they would have shorted it the minute it crossed the neckline, and then they would have probably closed it out down here once it reached that minus 100. Something to that effect. I didn't trade it that way. I couldn't trade it that way because what they were doing is they were using not only the ghost pattern but a lot of other patterns, and they had a lot of failed trades in there. And I didn't like doing that. I don't want a lot of failed trades. I want 100% of my trades to be winning trades. Now, many of you have heard me say that. I know that that's not possible. I know I can't be right 100% of the time. But that is my goal. And part of that being my goal is that I'm also working very hard all of the time to try to figure out if I'm going to take a trade, whether it's the ghost pattern or a continuation breakout trade. I'm working very hard to find out if it's likely to fail. And if it's going to work, why would it work? Is there the momentum that I'm going to need? Is there, the support of economic data that's going to drive price to my targets? There's all of those things that go into that decision for me to make that trade execution. So I couldn't trade it the way the guys in the Woody CCI Club did. They just look at the CCI. Many of them just look at the CCI, and they had a lot of failed trades, and I just couldn't handle it. I was still experiencing too many failed trades. I just can't do that. I have to see what's going on in price. I have to see, major support and resistance levels. It all helps. And I'm looking for confirmation with additional things like the dollar here and Japanese yen futures when I'm trading the yen. The dollar yen or any yen cross. It's really a valuable way and a valuable tool, combining like the dollar and Japanese yen futures and volume and all of these, anything that I can do to get that kind of advantage, knowing that my trade's going to work. Like when I sit back after I execute a trade, I know the trade's going to work. That's the feeling that you want every single time. And in order to get that feeling when you execute those trades, it takes a lot of work to make sure that you're going through, this mental checklist or an actual physical checklist that you have for the trading techniques that you're using. You want to make sure you go through that. I have some checklists for these trades that, when you go through it, my students go through that when they go through this checklist, when they see these trades, they sort of go down the checklist to make sure that they have the entry right, they have the stop loss right, they have the pattern is confirmed, and everything is lining up just right the way it's supposed to. So anyway, enough of that. Sorry about that. That's just, it was a really good trade, but it really came down to, again, that CCI ghost pattern. We're talking about it today in the chat room as it was setting up, and it was a relatively easy trade. I don't mean any disrespect by saying it was an easy trade. For those of you that got caught long, I'm sorry. It sucks to hear somebody say, "Oh yeah, it was an easy trade." It was, but it was a lot of work to confirm it and make sure that everything was lining up right.